Three sets of people who should avoid crypto and Forex.
Run.
Okay, if you belong to any of these three category of people, avoid anything that has to do with crypto and Forex. Please, it is important. The truth is always bitter, but it must be told. All right. My name is Victor Isibo. You're welcome to my channel. Do well to subscribe to this channel, turn on the bell notification icon, and share this video with anybody who has plans of going into either crypto or Forex. These three categories of people have no business in crypto or Forex. Number one, I've swiped my image. Now you can see number one. Let's talk about number one. Or you don't want to learn. Number one is those who don't want to learn. Unwillingness to learn. Now, if you like the money in crypto, but you do not want to understand and learn how it works, you are like a girl that is dating a man for his money. So you don't even know his name. You don't know what he does for a living. And one day when he shows you one side, a side of him you never knew, then you'll be surprised. Like, is this guy like this? That's because you're just in that relationship for the money. You do not understand the personality of the person you are dating. That is the way crypto and Forex is. A lot of people like the money involved, but they don't want to understand how it works. If you don't want to learn about the business at all, but you want to put money there and you want to make money, you will now make it seem as if the person that introduced you to crypto scammed you, or that they are lying to you, because you don't even understand the fundamentals. You don't even understand the basics. So if you don't want to learn and understand the basics, now saying don't want to learn does not mean that we are saying you should learn and become a professional trader. No. The basics. What is TP? Take profit. What is SL? Stop loss. What is liquidation? What is floating loss? What is unrealized PNL? Those are the basics that you need to understand, so that when somebody is telling you something about those particular concepts as it relates to your trade, you'll be able to understand. Now, in the card above, you will find a video that introduces you to the basic terminologies of crypto trading. And also in the cards at the end of this video, I'm going to put videos that I've done before that helps beginners to understand some basic things in crypto. That is the number one set of people. If you know you don't want to learn at all, you are not interested in the concept, you are not interested in the modus operandi of crypto, please don't be interested in the money as well. Number two category of people who should avoid crypto by all means, those that are allergic to risk. You see, those people who feel that they want to put money into something, they want to record zero losses and make maximum profit. Crypto and Forex is not the place for you. Okay? You guys should go and put money in treasury bills, stocks and bonds. You see all those money making opportunities that pay you 10% to 20% profit in a whole year. That's where your money should be. Okay? You cannot eat your cake and then have it. If you don't like risk at all, you shouldn't be in the place of crypto. Crypto is a place where you can lose. The best trader in the world, if they do a Ballon d'Or for crypto or Forex trading, the winner of the Ballon d'Or, let him or her come and show us their trade history. There will be losses there. So it's a game of winning more than you lose. But to say that you will not lose at all, it's a lie. So if you are the type that is unduly afraid, the moment you set a trade, you cannot sleep anymore. Every now and then you are going to check up on that trade. You cannot eat, you cannot sleep, you cannot play around. Your mind is always at that trade. Crypto and Forex is not for you. Okay? Now, number three, the impatient. If you are not a patient person, crypto and Forex is not for you. Do you know that experienced crypto and Forex traders can stay on one particular trade for 1 year? without any profit. They can make their profit on that particular trade after 6 months, after 3 months. There are situations that warrant that kind of situation in crypto and in Forex. So it's not a game, it's not a get rich quick business. Crypto and Forex is not a get rich quick business. If you approach it with the get rich quick mindset, you will get poor quick. Because you'll be using higher leverages, you'll be using bigger lot sizes because you want to make sharp money. So if you are an impatient person who wants to get rich quick, crypto and Forex is a no-go area for you. It's for patient people. Okay, it's something that gives you money in the long term. Yes, you can make money momentarily in the short term, but cumulatively, it is a marathon, not a sharp race. All right. Now, if you are of that get rich quick mindset, you have been exposed to a lot of Ponzi schemes that pay one particular amount of money on a daily basis, 1%, 2% per day. If you come to crypto, you will just come and be complaining. You see a lot of people say, I've not made any money on my trade. My trade has been like this for the past 3 days. No profit. What is 3 days? Baby, what's 3 days? Some people have been on a trade for 3 months. So crypto is a long-term thing. Now, to conclude this video, I am going to teach something basic that a newbie to crypto needs to understand. All right? So that you will be able to limit the amount of complaints that you make. All right. Now, I'm going to touch on the issue of floating loss. All right. Because that is what people see and they get panicky. All right. Let's talk about floating losses. In some quarters, they are known as unrealized P&L, unrealized P&L, profit and loss. Now, let us understand something real quick, how crypto works. If you understand how crypto works, it helps you to limit the amount of complaints that you complain when you are new to crypto. Now, this is a particular graph for crypto. All right. They say crypto is volatile. Volatility is the hallmark of cryptocurrencies. That is how come we make money from crypto. Now, volatility means this that I'm doing. Look at it. The graph of a particular crypto is always zigzag. All right, means that the price goes up, comes down, goes up, comes down, goes up, comes down. You will never see a crypto graph that is like this. It's not possible. It is not crypto. It is the volatility of crypto that enables us to make money. That means that the market does not go in one particular direction consistently. If you look at the overall mode of this particular graph, you will see it's an uptrend. It's going up. But even in the uptrend that is going, there are momentary ups and downs. You get? I'm going somewhere. I want to explain floating losses to you in a way you will understand as a newbie. Now, this is a pump. This is a dump. Pump, dump, pump, dump, pump, dump, pump, dump, like that. Now, let me make you understand something. I'm going somewhere. Now, in the game of futures trading, in futures trading, you are predicting the direction of the market. Let's say I want to trade BNB, the Binance coin, USDT pair. In futures trading, I am told to predict what will happen to the price of BNB. So if I say that the price is going to go up, then I am doing a long or a buy. If I say the price is going to go down, then I'm doing a short or a sell. I cannot predict the two at the same time. There is a concept called hedging where you can predict the two at a time. Then you allocate more of the resources to the one that is going in the direction of the market. That takes a lot of techniques. As a matter of fact, most times people that trade basically on hedging, they run at a loss at the end of the day because you're making money and you are losing money at the same time. Doesn't make sense. So the basics of futures trading is predicting one direction. Predicting one direction. It's either you say the price is going up or you say it is going down. You cannot predict the two at the same time. That is gambling. Okay? Now, what this means is that looking at this graph means if we say BNB will go up, meaning that in this particular phase, let me wipe and show you. Let me wipe again so that I will show you in a very clear manner, concise manner. If this is our chart for BNB and we have said it will go up because of volatility, this is the movement. Meaning that between here and here, we are happy. Hey, we are making money. We predicted that the price will go up. What happens between here and here? We are sad. We are sad because momentarily we are losing money. And what happens between here and here again? We are happy again. Between here and here, we are sad. Now, there's something called take profit. All right, impatient people, they set their take profit very low so that any small profit, the robot will take it. But the general concept is that the robot or the individual does not control the market. The market is the king. The market is volatile. That means that irrespective of your prediction, there will be times when you will be in floating loss. Floating loss means temporary loss. Temporary loss. It is not a definitive loss. It is a loss that can still move in your favor. Now look at this particular place real quickly. If we are predicting that the price of BNB will go down, for instance, if the graph goes like this, we'll be in floating loss. Why? Because it is going against our direction. But what now happens when the price now comes in our direction? We are now happy. But if we were impatient between here and here, we were impatient, we have accused people, fought with people, quarreled with people, then we'll go and use our own hand to close that particular trade. The loss now goes away from floating loss to realized loss. It has not become a reality because you have closed it. By the time the market now moves in your direction, you will not be there anymore. You will not be there anymore to enjoy that move in your direction. Now, when you see this kind of volatility, this kind of up, down, up, down, up, down, up, down, up, down, the time it will take for between this place, the time between this place and this place, it could be 1 second, it could be 1 month, it could be 1 week, it could be 1 year. So when you are on a trade and the trade is moving against you, always remember you are in a volatile game. What goes up comes down. It's like a bouncing ball. Okay? When you throw it up, force of gravity brings it down. When it touches ground, it is bouncing back up again. It's like a yo-yo. So your complaint is not permanent. Your joy is also not permanent in crypto, especially when that trade remains. Except what you will do is you keep your eye open. When you see that you are in profit, you take that profit. Okay? But if you're thinking of building a portfolio long time, you have to know that it is a volatile game. All right? So if you have this understanding, then you will complain less when the prediction goes against you. No robot, no cryptocurrency trading robot controls the market. Floating loss is normal because the market cannot always move in your direction. Because when you are predicting either of these two directions. You are predicting one. When you make one prediction and the market is going in two prediction ways, there will be times when your account will be in red momentarily. Now, what now matters at the end of the day is good money management. Good money management to avoid the disaster called liquidation. Okay? Good money management to avoid the disaster called liquidation. All right? So if you're looking for crypto robot recommendations that have good money management, shoot me a message via the description of this video. Join my WhatsApp group where we expose you to bots that minimizes the risk in the market. Remember, the risk in the market cannot be eliminated. They can only be minimized. All right? So thank you for watching this video. I remain Victor Esibo. I'll see you in the next one. Until then, it's bye-bye.